Hey, hello, this is Martin from Sept, the channel for learning about trading and investing. Welcome to another brand new episode of Markets Next Week, where we look at technical charts and try to understand what happened to the indices, what happened to the other stocks, sectors, and we'll discuss about option strategies, we'll have stock calculations, and a lot more. So stay tuned. We'll just look at what exactly happened last week. So the Nifty broke out for a third consecutive week and made new all-time high. That's 1.5% nearby. When 400 points up, and then it's still above the 20 exponential moving average, and it's close comfortably above the 26,200. That's 1,330 points just in 2 weeks. Can you believe that? 72% of rally from the June 2022, where we have the major swing low. So basically, it consolidated the first 2 days and then made the big move on a Thursday. Last week it was consolidation and the big move on a Friday. This time it was on expiry day, that monthly expiry. So markets are upbeat at the very top. What about banking index? That too broke out and made the all-time high, but it surprised on Friday with the reversal, making it a V-shape inward more volatile week for the Banknifty. Banknifty closed flattish, but just positive by 40 points less. And it's lost the 54k which it had conquered last week. So 4,002 point move is what happened in just last 3 weeks on the bank. Can you believe that's what triggered this up move? That's following the Fed rate cut week the previous week. So markets are extremely bullish in stocks. So this is how the parallel channel is there. It was a narrowing wedge and it has expanded now on the case of Nifty. This is a weekly chart. So you see on the left side Nifty and right side you have the daily charts. Daily charts of Nifty shows that there is an ascending wedge still there and just showing a red at the top of that ascending wedge. Here we have the Banknifty, which is still having a narrowing wedge, but has got hit at the top of the narrowing wedge. That's a weekly. On the right side, the daily shows a big Friday reversal after a few days of consolidation and a big breakout on Thursday, and then Friday it reversed, nullifying and closing flat. So basically the candlestick patterns, if you analyze, they're wide range bullish on Nifty, and it's a bull trap, bearish candle on the back. We'll see that. Look at this. This is the weekly candle. 3 weeks of solid up move. 2 weeks of solid up move. The Bank Nifty very 4,000 point move is what we are talking about. 1,300 to 500 points move is what we're talking about in the case of left side Nifty. So then this is again bullish on Nifty, but in Bank Nifty you have a gravestone doji which is dangerous. It's at the very top, and then if the price moves below this doji low, then you may have trouble. Or it could be that it may consolidate at this zone and then breaks out. But if price moves above this doji is high, then the move continues. Otherwise, we may have consolidation or bearish reversal. So that's the trouble that we see on the medium-term charts of the Bank Nifty. Nifty intact, absolutely no problem. So daily, the 5 days of last week, this is what happened. 3 days consolidation, Thursday big breakout, and then Friday bull trap. In the case of Bank Nifty, it's 3 days of consolidation, and Thursday big breakout to make new highs, and then quick reversal, extremely bearish reversal candlestick on the Bank Nifty charts. Bullish bands showing still expansion. Everything is intact there. Expansion with bullish bias, but too far away from the median or the 20 moving average. So, but yeah, potentially daily charts are showing there's more expansion. But walking on the bands concept, could walk out, and then unit gauge bullish bias up more further on both indices, left side Nifty and right side Bank Nifty. And that's a summary of what we have talked about, the candlestick and pattern. So we've seen the percentage moves, the story behind there, and the candlestick patterns, and then now let's see the momentum. The momentum clearly shows bullishness. There's nothing much has happened on momentum. It remains bullish and extremely bullish, and the trend indicator ADX is also bullish. This is a summary of that momentum, bullish, slightly falling. It was rising earlier in the short term. Bank Nifty also slightly falling, but momentum is bullish, absolute bullish on both time frames, higher and lower. It's medium and short, daily and weekly, whatever. Trend indicator ADX, nothing has happened despite this flattish close for the Bank Nifty. Trend remains to be bullish with rising trend strength in the case of Nifty and the Bank Nifty on both time frames, medium term and short term. So India weeks has will analyze that later, right? So now let's look at the India VIX. India VIX is actually, it's not plus, it's minus, it's fallen nearly 7%, it's at below 12 actually, so it's low volatility. But if you look at the moves in the VIX, it is very volatile in the previous week, although it remains in the VIX. So that's about VIX. And moving on, let's try to understand what the open interest is showing. The open interest, there is a contradiction between Nifty and the Banknifty, just like the charts are showing. It's a short covering, it is bullish in the Nifty, and it's a long unwinding in the case of Banknifty. PCR also is contrary between Nifty and the Banknifty. It's 1 and bullish, above 1 and bullish is PCR on the Nifty, and 0.69 is bearish on the Nifty PCR. So Banknifty is bearish. So next expiry, there is a truncated week that we had. October 1st is the Banknifty expiry, and October 3rd is the Thursday Nifty expiry. So the levels that we talked about, the futures oil and option oil, is for the weekly expiry, like that. So overall, you can see very big support is 26,000 in Nifty, and Banknifty is struggling to keep that 54, which it had conquered last week. That's what is happening. So the levels are as per the open interest is shown here for the next expiry. So Nifty 26,000 and 26,200. That's what the highest put and call writing is in. 26,200 and 26,500 is the next level of highest put and call writing. That's what the support resistance are seen. So 26,000 holding is a very good support, and that's what will be the key. And the upside, it can either consolidate with the 26,200 levels, or we can further break into the 26,500 as well. All Nifty levels and PCR and all that seems to be heavily bullish. Banknifty, on the other hand, has got highest put and call writing both at the 54,000. And the next second highest and loss put and call rating is at 53,500 and 54,500, and it's bearish PCI we already seen. So this II futures unwinding also happening here. So 54,000 is going to be crucial in the case of Banknifty. Right. On the top, what we have written down is the levels, not based on the open interest, but based on the charts that we have here. Let's try to see that as well. So Nifty support resistance levels are showing. So look at this. Price is at the very top of the trendline channel and at the 61.8. I'd always been saying that if 61.48 Fibonacci extension or Fibonacci retracement, if it is breaking out, it can be big moves. Therefore, it will have big resistances as well. It's what probably we are seeing here. So the next resistance upside would be to make clear that 26,300. That's where the confluence of the previous all-time high and 61.8 retracement, all that coming together. So 26,300 is going to be very crucial. Once that is clear, you can find the next resistance at rounding number 26,500, and then 26,850. That's where the 78.6 Fibonacci extension level is. On the downside, the first breakout zone, that's 25,850. It's going to be the first support. Before that, you have 26,000. It's a crucial support because it's a rounding number. So after 26,000 is breached, 25,850, and then the 25,540. That's where the 20 exponential moving average is. That's going to be a support. And then 25,322. That is where the previous breakout zone is there. So that's going to be the next support. If that is also breached, then 25,000 is going to be the next support zone. 25,78 to be precise, because that's where the previous breakout happened. And that's coming in confluence with the 50 exponential moving average. It's near the 25,000. So 25,000 is a very, very good support. In case the 26 support, which is also good, is breached, then you can find three places at 25,850, 25,550, and 25,350. That's the zones where the supports can come in the downside. Right. Look at the Banknifty. Banknifty actually broke over the 61.8 Fibonacci extension and then attempted to move about towards 78.5. It didn't work out, and then made an all-time high at 54,500 nearby. So that's going to be the first resistance. And above that, it's 55,000, which is a big rounding number, and then after that 55,422, because that's the 78.6 Fibonacci extension. That's the resistance on the upside. Downside, it has already found some good support at near the 53,750. So if the 54 cannot be attained and it's further falling down, then 53,750 would be good support, and after that 53,350 and 53,000 is a big support, and then 52,830 and 52,750 is about 20 exponential moving average and previous resistance. So 53,350 is a very good support because it's a neckline of that rounding pattern. Right? So that's also, if that is 53,000 also is breached, then you will find it moving towards the 52,000. That's where the 50 exponential moving average and the previous breakout zone comes. That's So it's between 53 and 55, you can say, right? So that's the Banknifty's levels. Make it out of those. So let's now try to look at the different sectorial indices. The IT sector was down last week, but it has recovered, but not much. It's flattish, 0.3% up, and it has formed a dodgy candle, and it's an inside bar as well. So there is some consolidation in the IT sector that may be seen from here on as per the candlestick. So it's basically sideways and rising, but in the short term, but in the weekly it's bullish and rising. So we need to wait for the short term also to catch up. Till the consolidation hour, a breakout has to happen there. So IT sector is the only sector that's not bullish enough to on both time frames. Bullish, it can turn to be bullish anytime, probably the next week. But as of now, if you look at and compare with the other different major sectors, the IT sector that is still has to catch up. But metal had fallen down, but it has recovered and then made a big gigantic 7% of up move, and it's formed a wide range bullish candle, and it's bullish and rising with momentum on both the time frames. So you can comfortably take long positions. Auto also 4.6% up, bullish momentum and the trend on both time frames, so you can take long positions. Pharma 2.2% up, bullish momentum and trend, you can take long positions. FMCG is flattish close, but it was bullish beginning itself, nothing has happened, flat close, so bullishness continues, and you can take long positions. Reality moved another 1.5%, it will record previous week, and then it still remains longish. So all the sector reality are as of now longish with respect to the time frames, both time frames momentum. That's what you see here. Look at this. These are the different sectoral indices. IT consolidating after the breakout. Metal breaking out with a wide range candle, climbing back in the bull zones. Auto at the top, wide range moves, bullish momentum trend. Pharma, small consolidation at the very top after the breakout. FMCG at the very top, extremely bullish at the very top of the trend channel. So wherever it is at the very top and here, we have to be cautious. Wherever it has some space to catch up, you can play. Metal has some more space to catch up. IT has been consolidating from time, it can catch up. So IT metal has scope for moving, but pharma, IT, auto substantially moved up. So you have to be cautious on that. Reality at the brim of breakout, it's a cup pattern forming, has scope for breakout, but it's top of the trend channel, so you have to be slightly cautious on that. Now if you try to see the different heavyweight stocks that contribute maximum, as you can see, HDFC Bank did make the big move last week, big volumes, and they tried to make new all-time high, but just closing just below that. So you just have to have a solid green candle above its previous all-time high. So it has been trying for 6 or 7 or 8 times to try to break out of the consolidation. Just still not succeeded, but momentum is extremely bullish. Trend is bullish. Anytime it can break, and HDFC moves, Banknifty moves like a rocket. Lions bullish wide range, trying to climb back in bull zones after a small dip or in the midway to the top of the channel. Volumes are good, so it can go up, right? But as of now, sideways and rising. It's not bullish yet. Remember, these are the key 3 stocks that contribute maximum, right? We're talking about the heavyweight stocks that contribute maximum to the index. ICICI Bank small pullback after that extremely bullish move on the previous week. Volumes are high, everything is good, bullish momentum, but slightly falling. Small profit booking is small, but some more space left towards the top of the channel. You can further move. Extremely bullish HDFC Bank and ICICI Bank. Infosys sector itself is consolidating, same as with ITC. Infosys also the moment is bullish. Tata consultancy bullish, some pullback, some consolidation at the very top. Kodak as usual it is moving in the sideways. ITC is making the big breakout moves at the all-time high levels, big volumes, momentum, trend, everything bullish. So ITC and the 2 bank stocks, HDFC and ICICI is holding, and Reliance also joins, then market can move just like that. All the heavyweights seems to be extremely good. Auto markets, if you look mid cap and small cap showing some trouble, especially small cap showing red candle at the very top, but still it is not retracing, it's just consolidating. Mid cap also at the very top, consolidation at the very top, momentum absolutely bullish. On the medium term, trend also bullish, but anytime it is showing some warning that it is facing some resistance there, so you have to be cautious about that. Yeah, now it's time for looking at what is happening around in the globe. Before that, how did the foreign institutions and the domestic participants like the mutual fund, how did they perform last week? So domestic institutions were extremely bullish as usual. They had small selling or profit booking that happened last week, but when the FIs were extremely buying. But this week The week after the Fed rate cuts, the domestic institutions are buying 50,000, 60,000 crores once again. But FIS, who are buyers, have turned to be sellers. Net nearly 4,000 crores of selling is what happened in FIS. So that is not that great news. So FIS were heavily buying for the last 2 months now. They are slightly selling. So you have to keep a close watch if that is continuing or not. Net longs on the derivatives continue to be moving up the last week as well. Right? Moving on, we'll try to understand the global commodities, the currencies, and the major global US markets. So these are the things that is analyzed here. The first to begin with, the dollar has been falling down ever since the Fed cut. It's the bring of breaching this 100. So it's a 0.33% downfall. That shows the dollar is falling basically. And rupee, was gained a little bit last week, but this week it bounced up once again, 0.23% up, and it's at 83.65. So it's an ascending wedge. It was breaking out towards the 84, so it is centrally managed and then trying to consolidate and move slow. So the trend line is still there. It is not gone below the 80, so rupee remains weak, although the dollar has fallen substantially. Crude oil is falling and it's below the 71, saying 68.57. It attempted to move up previous week, but due to the bad news that's coming in the Middle East, crude has once again fallen and it has fallen down to the bearish zones. So crude is nearly 4% down. 68. It's a bearish momentum and it's falling further. So crude is bearish. So it may be good news for an oil importing country like ours, but not that great news for all marketing companies. Gold, that is where the story is. It's making new all-time highs every single day. So that if you look at the gold, it's a 66% move that has happened from the previous all-time high. From this bottom, 63%. That's a kind of gold move. Gold is all-time high, and it's 1.3% high this week. And gold is rising is the moment that we're talking about. So Copenhagen had a breakout, as you can see, and ever since the war started, the next phase of gold breakout has happened. So yeah, whenever there is global worries there, gold spikes up, and when gold spikes up, people fear away from the stock market also may see some shift. Yeah, so there are multiple relationships, but the fact that it's a hedging instrument, it's saving you from any catastrophe is a good thing. But also at the same time, you have to be cautious about the equity market when gold is shooting up like crazy. Yeah, so that's about the global commodities. Now let's see the US markets. The US indices, Dow Jones, Nasdaq, and S&P 500 is what we analyze. All are near the very all-time high. S&P 500 and Nasdaq made the all-time high last week as well. It has made less than 1% of move on both of those. All three of this, including Nasdaq. Nasdaq has not hit reclaimed back the all-time high yet, but it seems like it's heading towards that. So all green US market is positive, right? Let's try to see. So here we have the stock mix to action for the next week. That's National Aluminum Company, NALCO. It's a longish call. Reasons: big volumes, rising RSI momentum above 60, trend rising up. Reasonable risk, good risk reward with tight stop losses could work out. Fibonacci extension showing that it can go beyond 220, which is only 50% of the Fibonacci extension. Okay, it's a couple of handle breakout. That is exactly what is happening, right? National Aluminum metal sector assets just breaking out. Now here comes Axis Bank. That's also long. It's a parallel channel. It's heading towards the top of that. Volumes are decent enough. Have tight stop loss below the weekly candles. Momentum is rising up. RSI above 60 and trend also is rising up. Axis Bank also enough of scope to move towards at least to the top of the trend line channel. So there's an F&O strategy for the next week. It's a weekly strategy on the Nifty. It's a bearish call spread. I'm slightly bearish, even though it could be that the market could move further up. So any downfall that may happen because of correction, I'll be not making any losses basically. Probably property 71.7 is at least enough. That exit before the expiry date definitely. And the RiskReward is this. Less than 50 exit before that. The range you're getting is also only on the one side you have to worry. If it is going beyond this to 26,375, then you have to worry. I assume that there will be some resistance that will come, and if it is not working out and is breaking out, then book a loss and come out. Right, so this is the strategy, and it's only small capital is required for one lot. So increase your capital size or portion size as per your risk appetite and your capital size. Right, so that's definitely a strategy for the next week. We will let's not try to wrap it up. So how if you do this? This was really what happened. A breakout last week. breakout previous week, breakout this week. So third week of consecutive big breakout moves is what we are seeing in the markets. The Banknifty also making new moves, but retracing or reversing on a Friday on the case of Banknifty. But otherwise, market has made new all-time highs last week as well. And the highest correction so far is only 10 to 11%, is something to keep in mind. And the rally from the previous major swing low of the June 2022 is nearly 70% on both indices. That's the kind of breakout moves that we had been seeing for the market last week. The story continues. So we try to put together what's in favor of the bulls and the bears. Let's see the bulls first. So wide range bullish candle in the Banknifty definitely goes in favor of the bulls. That's only on the Nifty might bet. And now there's trend moment indicators RSI and the trend indicator ADX, both are extremely bullish on both time frames on both indices. The operators from the futures is showing bullishness. That means it's short covering. It's only on the Nifty, and PCR is also about the one that's bullish. Again, that goes to the bulls. Bollinger Bands is still expanding, although there is a red candle on the walking in the band phenomenon, but it's indicating bullish biased more upside moves. Trending exponential moving average price is moving above that bullish. Heavyweight stocks and major sector index are all extreme, or RSI above or getting towards that. Then US markets are close green for the second week, and they are very near the all-time highs or at the all-time highs. And India is very low volatility. These are all factors that favor bulls. Now, what's in favor of bears? Grapes down, dodgy on the Banknifty. Beware. Long unwinding on futures on Friday Banknifty. Bearish PCR of less 0.69. Beware. There is a ascending wedge we are clearly seen on the Banknifty that's rising up and narrowing, and it can break down anytime. Be aware of retracement. FIS were buying good for the last 1 month or 2 months. Now they have turned sellers first week of long time. Beware. It came at a long time, is not breaking out, it's consolidating and showing some selling pressure and some resistance. Beware. Red candles in small cap for the last 2-3 weeks. Beware. Right, so you have to be exercising caution, that is for sure. Install tight stop losses and then trail it. Right, tight stop loss very portfolio level as well as the portion levels. Right. Sept investment mode, you just have to continue like that. So technically, chances showing it's shouting out loud that it is extremely bullish, but it is heated up. Interim corrections have not happened as required. So therefore, it's a bull rally, and therefore you have to be cautious. And then my view needs to be mildly bearish, not heavily bearish. My strategy on weekly options also indicates that. So keep that in mind. That technical chances don't always work. Whenever there is a black swan event like a war or pandemic or things like that, then technical goes for a toss, and then there's no point in relying on that. So keep that in mind. So black swan can come in anytime. All that you can do is hedge your positions and then hedge your portfolio. Right. Now for levels for the next week is 24,500 downside, 26,500 on the upside for the Nifty. 53,000 and 55 is the range for the Banknifty that I'm seeing for the next week. So as long as this 26,000 in the Nifty and 54,000 on the Banknifty is maintained, then we will see a potentially continuation of the rally or another leg of the rally, as they say. That's all I have. So check out my playlist for different option strategies, and then several other different topics like hedging and option strategies and etc. Check out that as well, because this would be specific to this week and this week indices mainly, but those in the playlist would have a lot of other things that you may need to be aware of, including the technical analysis parameters that I can talk about. That's all I have. If you like the video, share, subscribe, like it if you like, and then that's all I have. Thanks for watching, and I'm also present in the other social media. If you want to subscribe, you can do that as well. Thanks for watching. Bye bye.